Skipping this video would have cost one of my clients $52.2 million every single year. And here's what I mean. Now, what his CPA told him to do was convert to an S Corp. By converting to an S Corp, he could take a reasonable salary and then a distribution for the remainder. His CPA recommended a 40-60 split. And at the end of the day, after all of their expenses and after all of their attempted tax strategy, they were paying $52.2 million to the IRS every single year. Now, what we did is we came in here, we said, you know what, screw the S Corp. We need a properly structured business trust and beneficial trust, just the two entities. The business trust replaces the S Corp, and then that does all the business, pays for all the expenses. That $100 million in profit still was inside of the business trust. However, it's a simple trust, meaning all of the money had to be distributed to the beneficiary. Well, in this case, he's the sole owner, and there was one beneficial trust as the beneficiary. This was an irrevocable, non-grantor, discretionary, complex, and spendthrift trust. Now, with this spendthrift trust, he estimated that he spent about $10 to $20 million out of the $100 million on fun, food, and fashion. Now, those fun, food, and fashion accounts right there are the only unjustified expenses within this trust. Everything else is considered a Tier 1 income producing asset for the benefit of the beneficiaries. So the only taxable income is the distribution to the beneficiary, which would be him, for those three expenses. Therefore, his total tax liability at 37.5% distribution tax is max $7.4 million, and that's if he spends the whole $20 million on fun, food, and fashion. Everything else, Tier 1 income producing asset, and the taxes are deferred to the IRS. That right there is exactly how I just saved my client $40 to $50 million a year on his $100 million business. If you guys want to do this for $1 million business or a $500 million business, I've got clients in between. I can help you do this properly and legally with all the backing to make sure that all of that money stays in assets for you that can grow, not just go to the IRS.